you can actually address it. Yes, my bar does actually receive payments to Cash App. They do actually receive payments from Zelle. They receive all these different payments from other sources too. Get in front of it. Here's another good one: non taxable income. I
Mm,
cannot tell you how many times income has been cut because with that FHA loan, someone automatically went to the usual 125% or the one, the
mm.
25% gross up. Look at that difference in those numbers. You know that if you're dealing with someone with non taxable income, 9 times out of 10, that DTI is probably a little tight.
Yeah.
So this is going to make a huge difference. So absolutely make sure that you guys are looking for that. We're getting through these really quick, Scott.
Love
Um,
it.
varying variable income. We don't even have time to discuss that. Come talk to me, come holler at me, reach out to me. My advice for variable income, which is usually what Fanny's talking about, varying income, which is what FHA does, um, is to just remember that normally it's worst case scenario. We want to always give the very, very most income that we possibly can. And here's the thing: FHA is not standing for it. They're already giving them 3.5%. You know what I'm saying? Excuse me, 96% LTV. So they want to make absolutely sure that this borrower can afford this mortgage. So they're always looking for that conservative, that lesser than income. Last but not least, credit. There's a I think it's a verse in the Bible and it says it's the little foxes that spoil the vine. It's that little stuff that always gets you when it comes to credit. And here's a really good one: when those debts are less than 10 months, we get super excited. But if you're dealing with government programs, it's not necessarily less than 10 months. It's not necessarily just omit that debt. You have to make sure that it's less than 5% of that income. I usually have an accompanying slide with this that shows you the difference, like of what that 5% would look like. But in this case, this borrower payment is $450 a month. That's a significant payment. If that borrower is making, less than $5,000 a month, we got a problem. That debt still has to be counted. Why? Because once again, these are high LTV programs. And what they want to make sure is that we're not giving them any type of hardship. And that's a hardship. That's a nice amount of money. That, as a matter of fact, if we were to count that in the borrower's DTI, they wouldn't qualify.
Mm,
Believe
gotcha.
it, believe it or not, student loans are still the bane of all of our existence.
Oh my God.
Um,
Aren't they coming
most
off
people,
credit though? Aren't they coming off credit? You just gotta disclose them, right?
um, no. So for student loans, you have to use a certain percentage depending on where you're sending it to.
Okay.
So if it's like FHA, if it's like Freddie Mac, which is LPA, you can use that 5%. If it's Fannie, then you're using that 1%. Here's the problem: if you're not paying close attention and there's no payment, it'll get all the way to underwriting and you didn't include that in there. And so, bam, now you've got an issue because your DTI is way higher than you expected. So, I told you
Gotcha.
guys I was not going to teach you to death. Guess what? We're done. So, here are my
Wow.
3 points.
Okay.
Missing documents. Missing documents does not necessarily mean that you didn't have the document. It means that whatever that document is, if it had something on there, then you have the supporting document that goes to it. Last middle one. Know what you're working with. When you're dealing with those non-taxable incomes, are you using 115? Are you using 125? What income calculation worksheet are you or your loan partner using to make
Mm,
sure that you remember that? And when it comes to those non-QM loans and the deposits and stuff like that, is that a true deposit? Is it a transfer? Was it transferred from another account? Are you using the right expense ratio? Are they letting you use 50%? Are they letting you use 75%? And then the other one, zero in on DTI changers. I didn't change that. I said rent loss insurance and perils. Oh, sorry about that. DTI changers, student loans that don't have payments, debts that are less than 10 months. Here's an important one: undisclosed debt that was found on that bank statement. All of those are things that will come back and bite you in the Yahoo, and then you're mad because you missed it. Now, he told you to go to my website, asktheunderwriter.net. I would also love to connect with you guys on social media. I tried to wear the same outfit on all my medias so that you guys could find me and know who I am. So connect with me. Love to talk to you. Love to answer questions. And that's all I've got, Scott. I told you 3 quick tips. I wasn't gonna guideline the death. There's
I
no
love it.
test. I'm not gonna ask anybody any questions.
All right. What questions do we have for Dionne here? Let's see. What about working for a family member and or relative? They started this calendar year for them. Can the income be used? I had 2 different deals like this recently.
Oh, so the guidelines state that you need 2 years um, tax returns if you're working for a relative. And that's probably why Tom is saying
Mm,
that.
mm,
So, Tom, one of the things that I would suggest that you do, that you ask them, is will they take proof that the borrower's pay was actually deposited into the account? Because what the issue is when you work for a relative, is did the relative just give you a bank statement? Not a bank statement. Did the relative just give you a pay stub and an offer letter and say that you work for them? Or do you actually, you know what I mean,
yeah.
have that 2 years? Because what if it's a situation like your relatives or your parents own a restaurant and the bar was like, I'm gonna be top chef, I don't want to work for my family, and then they come back and they end up taking over the family business. So is it worth the conversation? I think so, if you can show that they have a history of being a chef and now they're going to go into their company's business. um I don't
Gotcha.
know, so don't quote me because I can't remember. I know that that's what Fannie and Freddie asked. I can't remember if that's what FHA and VA asked. But Tom, that's what you're battling. That's why they want 2 years, is they want to make sure that they actually reported that that income was actually earned.
Mm. All right. Any other, sorry about the audio issue on, somebody said they were listening on LinkedIn, so I had a little
Yeah,
audio
I've got,
issue there, but
I was gonna say, I've got somebody reporting in the background. The live stream is not,
yeah,
there's no
it's not
volume.
jamming.
So
Yeah,
yeah,
there's
no
no
volume over
volume.
there.
So all right, cool. All right. It's all good, man. Okay, so what else? Let's see, Greg, my problem, most of my customers, some reason, are moving across the country and closing their business and getting retirement, but plan on working there after they get there. How do I prove their income will actually increase?
That's future income. We can't use future income. So you're saying that they quit their job, they retire. How are they buying? So they can afford the house or they can't afford it? Because I'm curious to know how they quit their job and bought a house. Greg, are you here?
I'm here. I'll explain real quick on this particular one yesterday. She actually was one of the doctors to the president of the U.S. and then she moved to San Antonio. She's in the military. She's medical for over the base. Well, she's going to retire in about 2 months or a month. She's going to have like 9 or 10,000 in residual income from her retirement, but she's a CRN. So when she moves to wherever she's going, she'll get 150 to $200,000 job, but she doesn't want to go get that today before she moves. How do I prove that these type of people who putting 20% down, who have 800 credit scores, who we know can get a job anywhere they go? How can I get them qualified?
No, if they do they have 20% down? What about the no income?
It's the race like 9.9%.
I know it's not good. I know. Yeah.
So if they can get a job, and please don't take this personal. If they can get a job, why don't they just get the job before they move and start? You know what I mean? Start later.
So next point B, how long do they have before they have to occupy the property?
So generally, is it 60 days?
So she's gonna buy this property and rehab it, and it's a 685 property. She's gonna spend 200 in rehab. and out of cash. And she's, you know, her whole thing is, hey, I may not retire for 6 months or 2 months, or I don't know when I'm going to retire, but I want to go ahead and get this house bought. So because it's with my family, I'm moving where my family's at. She's going to raise her kids 2 blocks from sisters, right? So everything makes sense. It's perfect sense. I just don't know how to do a deal like that.
Yeah, so you can't really use future income unless you've got like an offer letter or something like that. But I was going to say what Tom said was to buy it as a second home for now. Um, but you know,
DSCR even.
so I can't touch the rate conversation because I stay away from stuff like that. But if she's not going to occupy it, if she could put the money down, because if she could put the money down, and maybe that's a conversation you and I can have offline, so I can see the actual numbers. Uh, can she afford the house with her retirement income? Because what I'm hearing is that she's retired.
She will retire. I'll tell you how I structured it. I'll be upfront with you. Her father lives with them, and so he's got pretty good disability and Social Security and military income. So I'm going to put him on the note with her to get the income up high enough to get him to qualify. And then he really didn't want to be on the note, so he really just wanted to be on the deed. I said, no, you got to be on both. And maybe I'm saying something I shouldn't say, but if you really
That
want
sounds right
him
to me.
off, you could do a quick claim deed after closing and be fine.
So I'm going to act like I didn't hear you say that the person that helped them qualify is going to quit claim off that loan later.
La 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 la.
This part will be edited when it
Oh,
gets
that's on the
posted.
show. Okay, never mind.
Oh yeah.
I take all that back.
Prank
I
caller.
love it. Frank Color.
And it
Dionne,
says,
I've got one
is he
for you
moving
real
in with
quick.
her?
Sorry, Greg. Go ahead, brother.
A question on the chat, is he moving in with her? Yeah, he's been living with her for the last 11 years. So yeah, he's going to move with her, and that's closer to family for everybody. So
Cool.
Are you talking about the one from Gretchen Shelton?
Yeah, let me
Cash out
walk you through it real
refinancing?
quick. So basically, we've got a client that has free and clear land they bought back in 21. They did a construction loan through a friend, and there's no note, and it's not recorded on title. The property is complete, and they just got the certificate of occupancy, right? So the borrowers moved into the property. Now they want to do a refinance and extract some of the funds that they got or that they invested into the property back out of it. So they want to do it as a refi, not as a purchase. And it's not recorded on title. So how does that work?
So it is real estate. It is a property. I want to make sure I'm clear with that.
Correct. It was free and clear land that they built single family residence on top of.
Okay. So can you said that they gave them the money. Can you document the giving of the money?
At the land, they give them the land and the money.
They own the land.
Just
So
they own the
land
land,
free and
just the
clear.
money.
Yeah, so the money for sure they can. It was it was a hard money note from a friend, but they can document where the funds came from.
So but technically it wasn't a note because you said it wasn't recorded.
No
Do you
loan.
actually have
Well,
a note?
yeah, so they wanted to refer to it as a hard money loan, but they didn't record anything and put anything on title.
Okay, but they do have the documentation.
That they borrowed the funds?
Mm-hmm.
I don't know specifically what we have. Gretchen, any way you can pop on and answer that question?
Yeah, they have, there was nothing in writing. It was just a handshake.
Okay.
They could write up one though, right?
They dabbed up on it. They're like, we got this.
As long as you can show the money being given, which
Yeah.
I'm hoping that he didn't give him a suitcase full of money.
We like friends like that.
Yeah, I want a friend like that. We want to document the paper trail. And look, I want to look up the guideline because I feel like with Fannie Mae, you can get back what you put into it.
Right.
Do you understand what I mean when I say that? So you documented all this money that you put into this property, and if you can document what you put into it, if Gretchen wants to reach out to me and her and I jump on a Zoom call, and I go through that and we see how to structure that, we can. That was Gretchen that had the information, right?
That's it. Yeah, Gretchen Shelton. And so effectively, we've got some stuff in the chat. So yes, the land has been on title for more than 12 months. The bigger issue was the money used for the construction financing was not recorded. So effectively, we want to do it as a refi, not as a purchase, right?
After, is it 12 months? 12 months, right?
They definitely own the land more than 12 months because they purchased the property, meaning just the land, raw land, back in 2021. We're in 2025. We've got 4 years of ownership of that land.
So does it even matter?
So the fact that
cash out refi, right?
See, I'm thinking cash out refinance, but I don't like to answer any questions without looking at my guidelines. But you should be able to, because remember, at the very least, you put that money into the property and you have documentation. Once again, unless you're carrying around suitcases of money and paying your contractors with cash, it's all about the paper trail. Okay, the questions are coming.
But will they ask for, I mean, like, we could talk about this, like, will they ask for verification of funds to build the house if they've already owned it for 12 months?
I don't think that they're going to, but listen,
so
I'll be the one that says no, and then something else will pop up that I didn't know, and then they'll say, when Dionne was on MLO Live.
That's right. That's right. That's right. Wait, let me pull that up. It's at 37 minutes and 27 seconds. Yeah.
Yes. I have a bar.
All
So
right.
you're saying there's a chance that we're going to leave it at that. Yeah.
I love it.
Yeah, we'll continue the research, but it sounds like there's an opportunity here.
Cash out. Craig B said cash out 75%. I mean, like, the lower LTV you go, the less they're going to ask for, right? I mean, the less risk. D's going to. So that's what I would think.
Cash outs are lower anyway.
Yeah.
I'm trying to answer your question and talk to this person. Debbie Kraft says that she is looking to reno the home.
Gift of equity, right? Isn't that just a gift of equity?
Yeah.
Gift of equity on an investment property. Is that an issue? I know you can do it on a primary res, but it's an investment property. So she's buying the property from her grandfather. He wants to gift her some equity. She's trying to pull the equity out of that to be able to invest. Like, once the rehab is done, pull the equity out of it to reinvest in another property. She's just building a portfolio.
Why not just put the price higher and have the grandfather give her the money back as a gift?
Once again, Scott.
Is that not legal? I'm pretty smart, right?
From now on, all questions will no longer be recorded.
Hey man, I'm not legally licensed, so I can say whatever the heck I want.
That's funny.
That's
Scott.
That's what Devin told me.
I didn't.
I know. Grandfather can do a gift of equity on an investment property. Is that what Jeff's saying? No.
I didn't realize it's an investment property.
Oh yeah. The cash from the build. They will not ask about the cash from the build. Craig B is saying.
And I would never suggest raising the price and getting cash back ever.
Okay.
I'm not touching that at all.
Cash. Hey man, there's more than one way to skin a cat, but I see what she's saying. So, like, I think for 12 months you're stuck with what you buy it for, right? Is that the rule?
So technically, but this is not that case. We're still talking about that one where
investment
he had
property.
the land
Yeah.
Because think about it like this: he's had the land for 12 months. He built his house on it.
I'm talking about the investment property from the grandfather.
Okay, wait a second. So
the grandfather, so he wants to lower the price, and then she wants to pull cash out. But to pull cash out, she's got to wait for 12 months to use the appraised value. Correct?
I'll be honest with you. What she needs to do is,
because she wants the equity that her grandfather's giving.
I'm not saying what you need to do. Reach out to me.
Yeah.
Yeah.
We're not on the.
Got it. I will. How do I get a hold of you? Just by your website they gave?
Find me on Facebook or on LinkedIn, Dionne Bass, Ask the Underwriter. You'll see all my face and all my
AskTheUnderwriter.net. AskTheUnderwriter.net. Yeah.
You got it. Thank you.
All right.
But listen, you guys made me feel really good. I kind of felt like I was about to come on here and bore you to death with all of my
I think we could sit here all day probably and run scenarios. So yeah, I appreciate you. Awesome. All right, guys. Well, hate to say it, it's Thursday. Always a sad day because I don't get to see you guys for like 3 days. So, I hope you guys have an amazing, amazing weekend, amazing Friday. Hope you get some recovery time, and you mark that in your calendar to take some recovery time. And look forward to seeing you guys next week right here on MLO Live Show. We have some special guests coming in. I think our mystery guest will be here next week. She couldn't do it today. So Deanne was more than graceful enough to come on today. And Deanne, I know we have some 3 other classes we can do. Here, I'll let you take a better pick here. Remove from Spotlight. I'll remove myself from Spotlight if I can. Where's,
No, I gotta go with all the people on there. Yeah.
I don't even know how to remove myself. So
I got a really good one too.
oh,
Yeah.
here we go. Remove. There we go. There we go. There we go. All right. So, yeah, without further ado, thank you guys for hanging out with us this week. You could be anywhere and you chose to be with us. And I hope you guys got something out of this week. And for those that are part of MLOlive.com, I'll see you guys at 10 o'clock. I got a question for you guys to ask on the coaching call that I'm excited to hear the answer. And I look forward to seeing you there. Rick, Coach Rick, I'll see you tonight, brother. You going to pick us up from the airport?
Picking you up at the airport, brother.
Let's go party at Rick's house.